We've talked about some general internal controls that we would like an organization to have. This video is going to go over some controls specifically related to cash receipts. So when cash is coming in, maybe in the mail, this would be when that would be in play. So we're going to start at the top of this diagram with these two blue people. So what this demonstrates is that we would like to have dual custody or joint custody of cash at the beginning of this process. So having two people open the mail or receive those cash payments is a good control to have, because if only one person has that custody, it would be a lot easier for them to kind of slip something in their pocket. So having that joint custody, having two people open the mail, provides a little layer of control. What those two people should do as soon as they open the mail or get their cash receipts coming in, they should endorse the checks immediately. So what an endorsement is you turn the check over and you sign your name on the back of it. So for a company, usually they'll write for deposit only into account, and then it'll have their account number. And it's typically just a stamp that goes onto the check so that it can only be deposited into that particular account. So the first thing they're going to do is restrictively endorse those checks. Then they're going to prepare a list of all the cash receipts that came in during the day. This is called the remittance list. So again, that's just a summary of, or a list of all of the different checks and payments that were made during the day. So when a payment comes in, typically there's going to be two pieces. There's going to be the money or the check, as well as something called the remittance advice. So this was the remittance list, which lists out all the receipts. The remittance advice is just that invoice or summary or statement that you send in to tell whoever you're sending your money in or your bill into how much you're actually paying them. So what we'll want to do is separate those two pieces of documentation in the next step of the process. So we're going to take one copy of the remittance list and send it with all of the cash and checks, and that's going to go to the treasurer's office or the cashier's office, whoever is ultimately responsible for preparing the bank deposit. So this little yellow person down here, they will get all the cash and the list of all the remittance list of all the payments that they received during the day, and they will prepare their bank deposit, send all of that money to the bank along, and we would have that happen, we say intact and daily. So we want the full amount deposited every single day so that we see the amount on the remittance list is going to be the same on the deposit ticket, and that's what's ultimately going to show up on our bank statement. We will take those remittance advices and send those with a copy of the remittance list to the accountant or controller's office. These people will be responsible for recording the cash receipts, so they'll show the cash coming in on their accounting records, as well as crediting any customer accounts. So if Betty sent in her water bill, we would make sure that Betty's account is reflected in that process. So again, these are just some additional controls that we would like to have on the cash receipts end.